Insurance relief is provided at the lower of 15% of the actual contribution. 15% of the actual contribution of the set limit of 5,000 per month. 5,000 per month. 5,000 per month. The set limit is 5,000 per month. So out of all contributions that we make to the insurance scheme, we are given a relief of 5,000 asset limit per month, right? Which is also compared with the 15% of the actual amount. You pick the lowest. Yes. So under this, we will with Kahaba. What's the amount? Is it got about the total hapa? 90, 91, and 150. Why? This plus this plus this plus this. And 150. Yes, yeah, 50, sir. And 1050, yeah. Then we less. We can start by the personal relief. Less personal relief. Less personal relief. The personal relief is given there under the table. Before the table, the allowances. We are given personal relief 2,400 per month, 28,800 per annum. So we are dealing it per month. So we less than 400 per month. 400 per month. Then also we less the insurance relief. And the insurance relief, we take 15% of the actual contribution. And we contributed that 5,000 by the employer, and he also contributed that 5,000. So the total contribution in that month was 70,000. 70,000, 15% of the 70,000. This is the actual. Then we have the limits. So the limit is 5,000 per month. This is 35. This is 710. 10,500. So the lower, you pick 5,000. So this will be the taxpayer. Relief reduces the amount of tax payable. Relief reduces the amount of tax payable. Relief reduces the amount of tax payable. There. So Gabi, 83,650. So that's the tax payable. Yeah. There is the tax payable. That is the tax payable. It's the tax payable. We can look at another question. After syllabus after wali changes vitu zinakuja kwa tu wamekuwa kizileta. Hata kuna nyingine hapa ijuzi tu. This yenye ilituma tukakule Christmas. Kimberly Macau, this is December 2021. December 2021. That is question 2. Yes, question 2B. December 2021, question 2B. December 2021, question 2B. December 2021, question 2B. So we can go through it. You're there? Kibali Macau is employed by Haki Limited as a marketing director. He has provided the following details to be used in the computation of his taxable income for the year ended 31st December 2020. Basic salary, 675,000 per month with a payee of 127,500 with a payee of 127,500 with a payee of 1. So we will less what? What will happen? We'll get the basic. This one is per year. So first we multiply with 12 to get the total basic salary. We multiply by 12, we get the total basic salary. Get the basic salary. Yeah. Then we have number 2. We'll deal with it for chini. He was provided with a fully furnished house with water, electricity, and a telephone line. Furniture. The taxable amount is 1% of the cost of that furniture per month. To make it per annum, multiply by 12. Multiply by 12. And we have seen, because now we have not been given for water, for electricity, and even the telephone line, we have not been given the actual amounts, right? So we pick the prescribed amounts, right? We pick the prescribed amount. We pick water, 500, right? Then you multiply with 1,200. Not 12 months. 12 months. Then electricity, we pick 1,500. We multiply with 12 months. Then we have telephone lines. Telephone line is what? 30 what? It's 30%. Telephone line is 30%. 30%. Yes? Of the telephone line. Ukiangalia hapo, if the employer has provided. Yes, actually it's provided by the employer. Yes. That's what the name inasema. He has provided the following to be used. So these ones he was provided with, right? That's what the statement says. So telephone line uses what? Inatumia electricity, right? Inatumia electricity. So we take 30% of the cost of that electricity. That is what will be taxable for the telephone line. Okay? Yes. Then number 3, the market rental value of the house was estimated at 135,000 per month. So we will what? Multiply with 12 and get the rental value per year. The cost of furniture was 850. So for telephone house, for rental, you try a pale chini, because you have to compare between what? Do you remember? The housing benefit. The housing benefit, we have to compare between 15% of what? The total taxable income and the market what? The market rental value. Do you remember that? And the market value and the market value. So the market value is 135,000 times 12 to make it per month, right? Then we'll calculate before we get the housing benefit. We'll have everything and get the taxable income. The employee, that is the income or the benefits from employment. We have the total, then we take 15% of that. Then we compare between that 15% of that total benefits from employment. Then we compare it with what? The market value. You are lost? All right, this is what I'm saying. The housing benefit. The housing benefit is taxable at the, we said that the higher or that the lower? At the higher of 15%, right? 15% of extra gains from employment. So the extra benefits from employment, right? So you see how we did this question? The way we have done this question, we have gotten what? All the extra benefits that we got from employment. We take 15% of that, all right? Then we compare with the market value now, which is being given here, all right? We pick the highest. Yes, that will be the housing benefit. So here to find after we compute everything for the benefits, right? Yes. So itakuja huko chini pia.
Question.
Then
a question.
Yes.
Do you said 15% of all benefits?
Sorry?
15% of all benefits.
15% of the benefits, yes.
Taxable and non-taxable benefits.
Yes, that's a taxable income. In other words, the taxable income. I don't know whether you're getting me.
I'm just lost in
all the benefits. In other words, the gains taxable. Everything that is gaining from the employment, right? They are the benefits to be taxable, right? We are subjecting them to tax. So the total of that, before now we do the housing benefit, right? We'll get the total, there is also. Ona after tulifika hapa, this was a total of what? The taxable benefits, right? It was the total because hapa tuko na housing benefits. So this was a total of all the benefits. So we take 15% of this. All right? Take 15% of this. Then we compare it with the market value. Like now, this one has been given 135 per month. All right? So we make it per annum. All right? Then we pick the highest.
So if it was that one, assume it was annual.
We assume it was this one, it was annual. We multiply with 15. If this one it was per month, we multiply with 12 to make it annual, right? Then we multiply with 50%. Then we take the 135,000, which was the market value per month. All right, we make it per annum. Then you compare between the two, we pick the highest. That will be the housing benefit. All right. Then, did we do what? The furniture. We have also the cost of what? Furniture. Furniture is 1%, right? 12% per annum, right? Actually, we had mentioned about furnished house. We mentioned here about the furnished house, right? Yes. So we take 1%, multiply by 12, we make it annual. Then you multiply by the cost of the furniture to get the taxable benefit. Then we have during the year, water consumed amounted to 5,200, electricity 16,400, and telephone bills 18,000. So already wamekuja wametupatia tena hapa. You see? Kwa pamoja. Wamekuja tena ukiangalia number 2. You see? Number 2, it was not specified, right? Now it has come, imekuwa again what? Specified. Hapa additional number 3, number 4, information 4. So, but still, ingekuwa iko silent hivyo. Ingekuwa iko silent, tutakuwa the actual. Tungepick still zile. Sini sawa? Yes. So number 4, we have said water Electricity, water, which one is coming first? Water, we have been given an actual 5,200 per year, sindio? And the prescribed amount for water is 500 per month. We multiply with 12, 6,000. We compare the two, we pick the highest, 6,000, right? Then we have electricity, 16,400 per month. Then we compare it with the prescribed amount, which is 1,500 per month. We multiply by 12, 18,000. So we pick the highest, 18,000. Then the telephone bills. The telephone bills now, they are what? 18,000. We take 30% of 18,000. That will be the taxable benefit. Yes. The telephone already, there was telephone line in episode number 2, but now the bill 18,000. So it's right. Just take 30% of that bill. I'm gonna say 30% of 18,000. That is the taxable amount. In other words, 30% of the telephone benefit is subject to tax. Vile tunasema which was still 18,000, right? Yes. Now we have been given this one for electricity bill, for telephone bill. So the telephone bill for the telephone line. No. That was in the scenario where we don't have the actuals. Yes. That was the scenario where the actuals are equal. But now we have been given them. Fortunately, to cover the same amount. Yes. So number 5, he was provided with a saloon car of 1,800 cc from 1st July 2020, which had cost the company 950,000. So the taxable benefit of a car, is at the higher of the CC rating amount and what percent of the cost of that vehicle? Yes, which percent? 2% per month. Good. So you take 24% of the cost. Yes. Then number 6, during the year, the company contributed an amount equal to 5% of its monthly basic salary to a registered pension scheme. So we take 5% of its monthly salary, 5% of 675,000. That was the annual contribution to the registered pension scheme. Then we are told that he also contributed an equal amount of to the scheme. And this is for the employer we don't tax. For the employer we don't tax. Yes. For personal we tax. Yes. For the employee tax. For we don't tax. Up to a maximum of what? 240,000 per annum. Yes. To a maximum of 240 per annum. Right. So here it is. Number 7. The company paid school fees for his son amounting to 52,000. This amount was disallowed for tax purposes in the company accounts. This was paid by the employer, exempted from what? Tax. Already it is disallowed. Yes. That means it is not subject to tax. Yes. Not subject to tax. Number 8. He received a bonus pay. A bonus is a benefit. He received a bonus pay equal to 15% of 1 month basic pay. 15% of 1 month basic pay. The 1 month basic pay is 675,000. So we multiply by 15, we get that bonus. in that month, So bonus is part of the benefits, and it is what? Subject to tax. Then we have number 9. The company operates a medical scheme for all the staff. Yes.
Bonus, subject to tax, and then what percentage?
The bonus, niote, you are to 15%. The whole bonus is subject to tax. Yes. The company operates a medical scheme for all staff. During the year, the company paid his medical expenses amounting to 45,000, for all staff. Is it discriminatory or non-discriminatory? Yes, non-discriminatory. That's non-discriminatory. Non-discriminatory. Yes. Now the 45,000 is not taxed. Yes. Then during the year, the company paid for his life insurance premiums. For who? For his family, 12,000 per person. 12,000 per person. So that is a benefit, right? That is a benefit. And we are told that he has a cover for himself, wife, and son. 3 people. So per person, ni watu wangapi hao? Watu watatu, the total 36,000. So that life insurance benefit is subject to tax. So the whole amount, that 6,000. Then we are told again, he received entertainment allowance amounting to 28,300 per month from 1st September 2020. So 1st September 2020 up to the end of the year, 4 months. So you multiply with 4 years per year. Only for 4 months. Yes, only 4 months. So, and that allowance is subject to tax. Then on 1st July 2020, it's only 6 months to December. Kibali Macau obtained a loan of 8 million from the company at an interest rate of 5% per annum, repayable in 15 years. The prescribed interest rate by the Revenue Authority during the year was 7%. So what does that give us? It gives us what? That's a loan given by the employer at an interest rate which is lower than the market interest rate, right? So in there, that's a fringe benefit. That's a fringe benefit. He has taken a loan from the company, which is the employer, which is, we calculate the fringe benefit tax. The fringe benefit tax in that. So the taxable benefit or taxable income for Kibali. For the year ended that 1st December 2020, and the tax payable, if any, from the income computed in B1 above. So we can start doing it still.